all hear me. So all I want you guys to do is to, in the chat box, just drop some 111s, just so I know that you guys can hear me loud and clear. Make sure it's open to absolutely everyone. Just drop 111. And then that way I know you guys are all clear. And we are going to go over some very, very, very important stuff today. Things that are going to ultimately change the direction of your trading this week and onwards. We're going to set out a real game plan for everyone. But ultimately, you're going to know what works for you best. You know, it's going to be mainly trading, training. And obviously, once we've done that, we are going to touch base on the building element, simply because there's so much money to be made there as well. It would be rude for us not to actually sort of get involved in that as well. We have some fantastic speakers today. We have the likes of Ersul, aka Mr. Gold. He is somebody that has only been with us now touching 7 weeks, already doing fantastic things within this academy, making a fantastic amount of money, and more importantly, you know, he's building the business as well, which is fantastic. Then we've got an individual called Andreas. Now, Andreas is someone that actually got started when I first started, you know, over 1.5 years ago now. Now, Andreas is a very concentrated, focused individual, someone that has been very much so focused on the sort of the advanced level of trading, and ultimately has learned a lot on institutional trading, which is basically the way that the banks trade. So we're going to cover a few angles. Now, guys, I just want to let you guys all know one thing, okay, and before we all get started, is it's very important that you all understand that everybody has a different strategy when it comes to trading. Now, some people like to scalp. A scalper is somebody that is in and out of the market in a handful of seconds, okay? I know a lot of you guys might not have been aware of that, but that's ultimately what that is. They're scalping the market, which is you're in and out very, very quickly. People that scalp tend to, you know, do a bigger lot size than what's necessarily recommended for their account size, simply because they're expecting it to move a few centimeters in the right direction for them to then pull out their money. So you gotta make sure that the way that you trade is the way that you are most comfortable with. You don't necessarily have to follow everyone's strategy or, you know, everyone's way of trading, because some things will work better for you and some people it will work better for them in another respect. So it really does depend on your sort of your day-to-day activities. If you're somebody that is at home, you've got nothing to do, and you're completely and utterly free, and you can have the screen open and you can go through, you know, the charts, then absolutely great. Scalp the market. Why not, right? If you're somebody that, you know, is working or has children, and you're not necessarily able to just stand there and look at the chart all day long, then ultimately you want to be able to place a trade comfortably using your 1 to 3% risk, and you want to just leave the trade with your stop loss in and your take profit in as well, and then ultimately you want to be able to make your money that way. So you want to discover what type of trader you are. Now, I also want to touch base on a lot of individuals today are in, you know, like anybody really, in a desperate need to make more money. Okay. And yes, the trading market can give you a lot of money. There is stories upon stories across testimonials, all the way down to the fact of, you know, like YouTube, where, you know, people are turning, you know, a couple of £100 into a couple of £1,000 within 24 hours. It's been done 1,000,000 times. I just want you guys to be, once again, fully aware that the people that turn a couple of £100 into a couple of £100,000, for argument's sake, in a very, very short period of time, these are people that have been in the market, you know, for a decent amount of time, enough time for them to be very, very confident with what type of trades that they do. Now, I also want to touch base on one specific pair called XAU-USD, which is gold against the US dollar. Now, ladies and gents, I want you guys to all be very, very aware that gold can do one or two things to you. And I'm sure we are all, you know, we all are fully aware that, sorry, let me just quickly open up the chat. So I want to see if, okay, so guys, put in the group, okay, on what you guys think about gold, right? XAU-USD, just put it in the chat group right now, okay? What you reckon gold can do to you. Because gold is, you know, gold against the US dollar, you know, sometimes, you know, it's your best friend, you know, and Someone's put make you or break you. That's correct. That's exactly what gold is. If you are someone that is new to the market, do not trade gold. It will hurt you. Okay. It will hurt you where it hurts. And you know, what you want to do is you just want to focus on making sure that the trades that you do enter are, you know, trades that you feel confident with. Now, if I want to talk to you about gold, just so you guys are fully aware, a lot of you guys are aware that gold, the way it moves is, if you was to put, well, not even if you was to put in regards to money, in regards to every single pip that gold moves, so every single centimeter it actually moves, it actually counts as 10 centimeters or 10 pips. So if I put £1 on a trade on gold and it moved 1 pip, it would give me £10, right? Now you need to also understand that if it goes the other way, it will take £10 and it will take £20 and £30 and £40, and it's only moved 3 to 4 pips. So I just want you guys to be fully aware that, you know, you can, you know, ultimately for you guys to understand that you want to trade the right pairs. I'm not saying don't trade gold. I'm just saying everybody has a time and place when they feel very, very confident when it comes to trading gold. Now, we have got somebody on the call today called Mr. Gold, also known as his full name, which is Ersul. He's a fantastic individual, someone, like I said to you, that's been in a part of the business now for around 67 weeks, has made tens of thousands of pounds already since he got started. He is very, very good at what he does, and he's going to be sharing with us exactly how he does it, along with his mindset that goes with his trades. So without a further ado, I'm going to find Ersul on the group. There he is. Right, Ersul, I'm going to make you host, buddy, and then I want you to take it away. Guys, please put some fire emojis in the group chat for Ersul. He's a Platinum 1000. He's done it in record timing once again. He's someone that's doing ultimately fantastic things in this business, and he's helped so many of us. I'm sure you guys can all relate. He's the first one to reply to you in every single chat in the WhatsApp group. You know, he's a very, very good person. You know, his heart is huge. And his bank account's even bigger. So ladies and gents, without further ado, I'm going to pass it on to Mr. Gold. So I'm about to make you host, buddy. Take it away. You are host.
Yes. Can everyone hear me? Just put a little, just drop a little 1 in the group if you can hear me, so I can carry on without you missing everything. All right, sweet. That's clear as. Okay, cool. So thanks for the patience. Thanks for the introduction. So I'm just going to say a couple bits about myself just very quickly, because I don't want to go into too much of our valuable time. And obviously, I just want you to know who's actually speaking to you if you don't know. So obviously, for those that don't know, my name's Ersul. I mean, for myself, yes, I haven't been in this company for that long. I mean, obviously in comparison to obviously people that have been in longer, obviously the company's been going a long time successfully. So obviously, naturally, there's thousands of people around the world that have started and doing great things, hence why we're here. So for myself, obviously from young, I've always just been a grinder, worker. I've always done things by the book. I've always, to be fair, trying to understand the book and work the book in my favor. So that's my mindset already from young. I've always been in financial services. So I've always had a input and like for how money is. Where does it come from? Why do we get paid what we get paid? Like, why is it that this person does the same job in this area and they're doing the same job in that area, but they're on, like, one's earning double the other? What is that? So I've always had questions. So obviously I've always jumped into finances. I've always loved hedge funds, always worked with assets. And when this come across, as Ish might have said, he's been trying to talk to me for a while, and I've been busy, he's been busy. And as soon as we just sat down and went through this plan, obviously the business made sense. I've got a business mind, so we've jumped in. So within, within 12 hours of joining the business, because when I joined, I didn't know that there was anything other than a trading element. So I thought everything about the trading, what they had was amazing. So I knew I could make money. Plus I already had knowledge in trading, already made money in stocks, not Forex, but those that trade can agree that a chart is a chart, a candle is a candle. I can look at anything. If you know how to read it, you know how to read it. Just like if you know how to read a book, you pick up every book, it's words. So it's the same. So obviously jumping into this, Yeah, first 12 hours, I became P150 because I just called 3 people that I know want to make money and I already have business with them. They came in and naturally the company started rewarding me funds. And we've been trading since and team grown since. Within 6 weeks, I think I hit P1000. It was 6 weeks or 6.5 weeks. So getting £1,000 a month, whether I like it or not, obviously, naturally, that's nice. It adds to the income and then obviously adds to trading, subscriptions free. And it's just nice because then you show other people and you help them grow their income residually and from trade. So overall, all good. So let's jump into like the trading side of things. For me, when it comes to trading, I just want to start from the beginning with routine side of things before I start saying knowledge. So obviously everyone's got their own routine. Everyone's got their own lifestyle. I appreciate that, but we all wake up, we all go sleep. So before I go sleep, I know exactly what's gone on in the day because I'm either been checking it or I've checked it there at that night, depending on how my day's gone. So for me, the reason why they say Mr. Gold, obviously I appreciate that, but my main pair is XAU US dollar, which is obviously gold US dollar. I like it a lot. I also like I like any pair that's in a good position. If it's going to make money, it makes sense. But I concentrate, correct, on XAU US dollar. So for me, I will check it at night. I'll check the graphs. I'll check each time frame. I'll see what the general trends, the supports and resistance are. And then I will recheck it in the morning when I open my eyes. Generally, that's prior to 8:30 UK time, which is obviously prior to any London Stock Exchange opening. So I'm ready. And I'll have things checked in the morning. Now, naturally, after that, I would also check harmonics. I'm paying a service. So I'm going to check if anything on there is either confirming or further advising my trade that I'm already looking at. Obviously, loads of successes from Harmonic Scanner. It's got a great percentage. And then I'll conversate with the team. As we know, most of us in there, I'm sure we're part of the same group, and then you have your own teams. I personally, in the group, I'm definitely with my own team, my own leaders, because obviously several leaders now in my team. We will make sure that we've got not just one mind and two eyes on the trade. We combine our knowledge and then we jump into the trade. So do them things, check it at night, check it in the morning, check the news and conversate with your team. Don't ever feel like I'm going to enter into this trade on my own. Even if you're in my team, I don't mind if you message me. It's not a problem. Several people have. I haven't even checked where they are in terms of team. At the end of the day, I will help people, even if it directly benefits me or not. It's fine. Someone help me. So moving forward, when it comes to your studying, a lot of people have got this theory of I need to find the best strategy. Now, that's good, and you should find the best strategy. But the only way you're going to do that is by literally testing them out. And if you haven't already started trading, especially live, then you should have started utilizing a demo because, as you should be aware, it's identical to the real live account, which means if you're doing well on there or you're doing bad on there, that would have translated in real time also. So you want to obviously get confidence on the demo and then you can obviously transfer over and start utilizing the live. Now, does a trader, even when they're on live, do they ever lose? Yes. If any trader tells you they don't lose a trade, they're lying. I lose trades. Now it's all about your risk management. So these are the kind of conversations obviously you can have with either us or generally you should be having with your team leader. Obviously your risk management is key. So that, I mean, just to give you an example, last week I entered into a trade on a buy on gold, which I posted. Now, obviously I posted the win. I didn't post the 2 losses before that. So I took a loss I tried to enter a trade. My stop loss is tight because I like my risk management to be tight. As much as I was confident it was going to go up, I entered and it came down a little bit. What did it do? It hit my stop loss. It took me out. I then entered again. It hit my stop loss again. It took me out. So within them 2 moves in the space of about 3 minutes, I lost £10 and lost about £12 or £13, something like that. So in my mind, I know I've lost £23 on that trade, for example. Then I entered on the 3rd time. All this while, I know for a fact it's going up. It's not a matter of it's not. I know it is because it's ridiculously smashed through all of the supports and any indication highlighting anything it should be doing. So I've got confidence, right? So by entering on the 3rd time, it's now gone up. Now I had a 2 lot size on that, which is on gold would be about £20. And in the space of 3 hours, that was way past £3,680. So obviously that goes to my principle of, yes, there are people that lose trades. Now, the same trade that made £20 into £3,680 in 3 hours was the same trade I had entered 15 minutes prior twice, but hit my stop loss. Now, some people would say, oh, but if your stop loss wasn't so tight, those would have came back in profit as well. Correct. That is true. But that would go against my strategy, which is to have a tight stop loss. I can afford those 2 small L's because my big L, no matter what, is coming, and it will massively outweigh that L. Now, if you start changing your strategy during the day or during the week and you're not consistent, you will lose trade, and you won't even know where you are, even if you're winning, because you're not keeping to something consistently. So number 1, check the charts day and night. Number 2, check harmonics for reconfirmations. Number 3, conversate with your team, conversate with other traders, see if the knowledge you're looking at or what you're entering is correct. I understand sometimes there's time restraints, some things are there and then, and as a trader you need to have that know-how, but most times, especially if you're prepared, then you will have ample time to do that. And then obviously, most importantly, just keep studying your strategies. Now, with your strategies, combine different ones. Have a few indicators that you use, not just one thing. So for myself, I'm going to say them now. I use the Williams alligator, which is very useful for me. I'm going to explain in a minute when I screen share how I do that. I also use SMAs, and I also use EMAs. So that's Williams alligator, that's SMAs, that's EMAs. And the last thing I also use, just to correlate with everything that I'm doing, just as a double check, I use RSI, which stands for Relative Strength Index, right? So that's Williams alligator, SMA, EMA, and RSI. Very, very simple. I'm going to explain what they are and how I use them as well, and I'm going to show it. But these are just things that I use. Now, these aren't all the indicators I used when I began trading. Even when I was winning on trades, I still was looking to better what I was doing, because as much as I was studying my wins, I had to understand why I was losing. So everyone's like, oh, well done, you're up. Yeah, I know, but I need to understand why I'm losing so I can minimize that. So you'll use indicators, and you'll also change indicators, and you'll also combine them. So when people say, I need to find what works best for me, yes, but you need to try things to even have the language to understand what works for you. So do that on the demo. Don't wait for someone to tell you, go make money. Like, do that, right? So main things I do when you should be trading, you're looking for longs, which can generally, some people leave trades on for like a week, a month, which is no problem. Some people do in and out quite quickly, which is scalping. And for me, I do a lot of scalping. A lot of posts that I do are scalps. And what that just in general, that's basically just going in and out of the market fairly quickly. You're basically just profiting off of price changes in the market. That's essentially what it is. So I could literally enter into a trade at the start of a candle and be out of the end of the candle at a profit. So that's not even anything to do with what anyone thinks when trading. You think go in at one point, come out at a higher point. Now, technically, I am going in at a lower point and a higher point, because I'm going in at the bottom of the candle and coming out at the top. Very, very small amount of pips, but sometimes I do that a little bit aggressive with a bigger lot size. So rather than just doing a long trade, I'll do something like that. But bearing in mind, and I want to say this is very important, that I do things like that because of calculated risk and because of my account size. And I don't mean that in an ego way, because there's many people I know that trade that their account size is bigger than mine, and it will get there one day. But where my account size is now, I know what I can and can't do. So I'm not going to do something dramatic that is going to, with one move, go negative and wipe out 30% of my week of going up. That doesn't make any financial sense. So, but when you know that it is, when you really know and you'll have that know-how, you can enter a little bit aggressive and ride those kind of things. And you'll make those decisions in time. It's not something I advise at the beginning, but these are kind of things that you should do. Because I want to touch on that, because I post lot sizes sometimes I cover them, and I don't want people to ever think, oh, he's doing that, it's going up, I'm going to do the same lot size. You have to kind of do that in respect of your account, because there's people that do trade post trades to me and their lot size sometimes is 200, which is 2000 going in. Now, me and that person are catching the same pips, it's just their liquidity return is higher because we both went in at different amounts. And that's what you need to do. You need to pace yourself and get confidence. So I'm just going to show my screen. And I'm just going to show a couple bits now on the graph. Now, what I've got up here is basically my harmonics. So I'm just picking something random because this doesn't matter, just to explain a few things. So, for example, for those that don't know, the EMAs I mentioned and SMAs, there's a small difference between them. I mean, EMAs, that basically stands for exponential moving average. I mean, the EMAs are always good for truly just identifying good buying and selling signals in the market. It does sort of provide indication for obviously the best recent data points. That's kind of why I use it, because EMAs, they compress like the most recent price action in the market. So I use them to basically go off of identifying trends. And the SMA is generally the average. So it just gives you the average. So you can pick an SMA moving average, which you could pick any day, 9, 10, 20, which is basically picking the 9-day average, 20-day average. Obviously, as you know, to get the average of something, if you're picking 20 days, what that's basically doing is picking the closing price for that day of the most recent 20 days, adding all them numbers together and dividing it by 20. That's how you get the average of something. So 20 divided by 20, what that number is. So it's doing that for you automatically. So I put them in play. As you can see here, I've got my 9, my 20, and my 50, and you can color them as you want. So those that don't know how to do this, you can do it on TradeView, do it on harmonics, it's up to you. But just to show you, you would click indicators, and then you would just search, for example, EMA, you'd get moving average exponential. You'd click it, it would add here, and then you can click on it from here, which is this button here, and you can make it any color that's clear for yourself. For example, if you're making different days, obviously you're going to want them as different colors so you can know which is which. And then obviously you can pick the number. So that's the color, that's the number, right? So for instance, I could put this as 200 because I already have 9, 20, and 50. And then I would make this color, for example, something I don't have, which would be on this one. And then that would be that. So then now that's added in there as well. Now, the way that I use EMAs, for example, is mainly, for example, how can I explain? I'm going to explain this in like the most simple way I can, because for anyone that's looking at this call, you're not going to get all the information about EMAs, SMAs from this call, and I have to keep it brief anyway. So you should be writing this information down as go-to things to further study, and then by all means message me anyway, and message anyone in this group to help you, but you can message me directly. I'll jump on a call with you along with others, no problem, but you have to do this work yourself, obviously. So, but this is generally what it does. So with the EMAs, obviously the main thing that you need to understand is it's giving you the idea of where to buy and sell. So for me, with things like this, where you can see all the lines are consolidated. For example, my lines, the 3 lines, look, these are the lines, yeah? Just to be clear. You've got the yellow, got this one, which I believe was a shade of green. I put this as shade of violet, and this was another one, which just saw me add. And all of these are congested here, so very, very tight. Me, I will be doing nothing around here if I'm using EMAs. Nothing at all, because there is no clear action. There's no clear direction. What I'm waiting for is something like this. So that my 9 moving average, my 20, 50, and the 200, which I've just added. So irrespective of 200, that's very broad, but these being the main ones, if I only needed 3, these are fine. I can clearly see that my 9-day average has gone above both my 20 and 50. So let me zoom in here so you can see, because that's not very clear. A little bit clearer. I hope you guys can see that. So these lines here, this yellow one here, this has clearly gone above both lines. Now that for me, even if I didn't come in here, because I'm not greedy, I'm very conservative. So I'm happy to build slowly and consistently, then have a big day, have a bad day. No, that's called real fluctuation, that is. So with this said, obviously this yellow line has gone above, meaning my nine moving average has gone above, which is where I wanted it. I wanted it above the 50, the 20 and 50. You want it above it. There's clear gaps between them. This is in a clear buy motion for me. And not only am I correct about that, even if I'd come in here, which is when it crossed, I could have come in here, I could have come in here. This is me, I'm laughing with these pips. I've had no drawback. That, yes, you have drawback because obviously the market needs to breathe, but it is going up. That's the motive. So if you took nothing from this, just look into EMAs, because I promise you, no matter what you're doing, this is needed. I don't know any trader that doesn't use this. I don't know any trader that doesn't use this. Now, the first go-to thing that any trader goes for is, of course, candles. That is your primary source of knowledge, facts. Yeah, I don't mind what anyone says, but I know what I'm doing. Facts. That is what candles are, the direct information. Following that, you have your indicators, you have news, you have your team, which not everyone has a team, and you have other sources of your indicators, e.g. harmonics and your own analysis to make your decision. Average traders have 4 things they look for before entering a trade. 3 of them be a tick, fourth not ticked, no entry. That's discipline. So you need to know what you're looking for, have them tick, then you enter. It's not like, this ain't gambling. You can't just, it's not, oh, it will go up, it will go down, or it will go to the side. If you've got that mentality, you'll be sick at roulette. You can get black, red, or it might go green. So you should go there. But if you want to trade, you have to follow a morphology, a logic. And this is one, people want to know what I do. This is one of the main things I do. So same principle. Let's see if we can find a sell. All right, right here. Now, my 9 moving average at this point, this yellow line, has gone below my 20 and my 50 moving average. Now, I would have come in at this point. The reason I wouldn't have come in this point, you might say, but why not coming from here? You could have caught these pips as well, correct? And I could have. And I've done that before, and it's worked sometimes, sometimes not. And because of that 50-50, I like to just be 100%. So I'll enter here. Once again, I'm conservative. This has crossed both lines. It is in a downwards trend, facts. So I'm going to enter here, and I'm still winning. I'm still winning. My stop loss has moved down as well because I'm winning. So I can't lose in this trade, and it's a further dip. That's fantastic. Keeps going. It keeps going. So that I've seen no change. I'll keep coming down. Now, right here, you might say, okay, it's come up a bit. But not really. Like I said, that's why it's good. And that's why I just said a moment ago, it isn't always 100% without it crossing. Because look here, it looked like it was going to cross. This looks like, oh, it's going up. But no, it was just breathing to then carry on going back down. So this is why I wouldn't have been at an entry here. I'm waiting for something like this for the crossover. I'll take these pips. No problem. No problem. I'll take these pips. So, and yes, I could have took extra, but no, I'll take these ones. It's fine. So have a formula, have a target, and I don't want to go over time, so I'm going to not go for too long, but have a target and be disciplined. When I started, I was starting and aiming for a small target on a daily basis. So when I hit that figure, I will turn my laptop off, not my mind, not my business, not my effort to grow my knowledge, but my trading was on pause. It was paused at a success. It will resume at a success. Yes, I've had days where the trade is going wild in my favor, and you'll have them days, of course, and you'll exceed your target. That doesn't mean that tomorrow's target has a reduction of it because of the price that you've hit on this day. No, that's just called bonus money, which is what you should be looking for in life. Bonus money, extra avenues, growing. It's bonus money. You don't make tomorrow's work easier because of today. It's easier technically, but you've got full energy. So you go again. So this is the EMAs, right? So that's the EMAs. Now, very, very similar principle with the Williams alligator. I'm just going to load my gold. I'm just going to load my Williams Alligator, and I want to add some knowledge for those that are fairly new with trading, maybe not entered a trade, maybe still on demo. But you need to understand that although the market can only go up, down, and to the side, yeah, we know this. News has a big factor to play, and just understanding what you're looking at will obviously help you massively, because I know it sounds obvious. Obviously, if I can read it, that helps. But I mean, literally, if you can read it, you can open any graph, any time frame, any pair, even if you've never traded it before, and you can get a quick feel for what you need to do and what you're looking for. You need to look for obviously key support lines, key resistance, and then you just go with the trade. It's not that difficult. It's not that difficult, because I can promise you, most of you on this call, probably before you even looked at charts where the knowledge is you are now, you thought to yourself, how am I going to do this? And now you're actually thinking of how I can make more money. So it's just your mindset. Now, obviously, when you're trading in the market, just to go over some basics, like obviously there's things like, how can I show this on it easier? Let me just put it on a different time frame. 15 minutes. So in this, now you might be thinking, what's all these lines in the background? Those lines is an indicator I added, which is basically sessions. So depending on the color, I know what session it is, what time zone, e.g. London, New York opening, Asia, Sydney, etc. So it's good to know what time zones you're in. So let me drop some key information with trading, yeah? Habits. When it comes to habits, yeah, always stick to your strategy. Always stick to your same lot size. If you've just lost on a trade and you was in a buy, don't have the mentality, oh, I was in a buy, it's come out, let me go in and sell. Okay, oh, the sales dropped, let me go in on a buy. No, if that was how we done trading, then everyone will be a trader. When you sign up for apps like Plus 500 and 212 and trading, they will tell you 74% of traders lose their money before you sign up. That's because 74% of people are not doing it properly. Simple. And or then people could have done it and someone showed them wrong and they've been demotivated, or they tried to do it on their own. So just stick to your strategy and just do it properly. Now, basic information, have a target, hit a target, rest there. Don't overwork yourself. Now, I'm a big believer in striking when the iron's hot. If you think you're on fire, killing every trade, that's up to you. No one takes any of your commissions. No one's going to tell you how to trade. It's advised. It's up to you. I can only tell you what I do and it works. So it's up to you. Obviously with a trade, when you're identifying trades and it's going up, look for entries on drawbacks. So what I mean by that is, let me give you an example with this, what we're looking at. Look for drawbacks. So don't look, oh, everyone's putting in the buy, it's going up. Yeah, it's going up, but you have to get a good entry. Otherwise, it's not going to make sense. This is me just calculating pips. Look, I actually done this. So this was 2,313 pips. That was a good trade. That was a good trade. Right. So for instance, here, it's on a buy. Let's go around here. It's at a buy. Everyone's like, oh, wicked, it's at a buy. Let's go in. Yeah, cool. You can come in. You can come in. Some people might have saw it late. Some people might have saw it when we're posting this. It's like, oh, it's on a buy. Yeah, you could still come in here, but you got all this drawback. And believe me, depending on your lot size and depending on how many pips, this drawback might be your stop loss, your stop loss alone. So what I'm saying is, allow the market to take a breath. Like, there's a lot of people that will tell you this basic logic that this market is essentially like someone running up a hill. Believe me, at one point they're going to stop and they're going to breathe. They're going to breathe. And that breath, that breath is a retracement. It's still going up. They're still going to run up the hill, but position yourself properly so you can still make win. But why take this loss and then wait to go in profit? This could be hours. Don't do that to yourself. If anything, if you know there's going to be a retracement, take the sell, then take the buy. Roller coaster. That's the best way. So look for these things. Now, some of you, I'll go through it on another call, but some of you should already be looking at Fibonacci tools for such things. So a Fibonacci, let me just quickly do it. I know I've been on it a little bit a while. Let me just open it. Where are we? So for instance, if I'm looking at it from anywhere I want, you can pick anywhere you like. So for those that don't use Fibonacci, you should, especially if you're looking for retracements. So even on, I'll go from here, because this was a different low. So I can bring this all the way to the top of this candle, and I'll put it to the top of that candle. Now, let me not confuse this. This is very, very easy. The top of it is obviously where the market was at that, ignore all of this, right? That's where the market was at that point. These are retracement levels, right? These are retracement levels, and those retracement levels will indicate your entry. Look, this one, the first retracement would have been one of your points. And if you can see, this is exactly on the line, man. Exactly on the line. So you would have been looking at things like this, because this is definitely an overextension. Now, down here, this is one of the indicators I mentioned to you lot, which I know you're going to look into. Any indicator I've said, I haven't got enough time on this call to go through all of them and for you to understand it and not have another question. Impossible. You have to check these things. So Fibonacci tools, obviously look at them. The academies go through it also. But just to be very quick, this alone, yeah, this overbuying here is indicated here by what I mentioned earlier, the RSI, which is the relative strength index. This is clearly overbought. This is all making sense. These are all overbuying times. Overbuying is massively overbought. It's come out of this box, this highlighted box massively. And this line is exactly this line. It's this point. It is natural for there to be some sort of retracement. And if you don't know about RSI retracements, go to YouTube and search divergent strategy. I repeat, go to YouTube and search divergence strategy. That's how you can use the RSI for the RSI alone, just for reversals and things like that, which further go into things like head and shoulders and bar patterns, which you should be looking into. So for instance, this is a great indicator. Like I said earlier, what did I say? RSI. I know from this has been massively overbought. But if I'm in at this point down here, which I would have been, this doesn't really scare me. This is just an indicator that I'm going to have a bit of retracement. I'm still going up. But someone knew this is a great indicator. Say I'm not in this trade. I just looked. Okay, great. RSI, boom, it's up too high. It has to, it's one indicator. It has to be a level of retracement. It's been pumping for too long. Has to be a level of retracement. These candles are so pumped, very likely it could have been an institutional pump. All good signs. Then I put my Fibonacci on. I'm looking for that retracement, or I might have just put my sell in and had my buy limits ready. So if I would have had buy limits ready here and here, both with stop losses. If this hit, great. And if it came down to here, fantastic, but it didn't. It just took this one. So this one never got picked up. I'm up in this one. These are the kind of things. I know it's probably like, oh, that's a lot of information, but it's not. It's not a lot of information. All I've said is that you use this tool to identify entry points for retracements. Not hard. Look it up. Fibonacci tools is free. Divergent strategy, which is reversals, which you can use with relative strength index, RSI, which is one of the indicators I gave. Once again, it's not difficult. Look it on YouTube. There's loads of videos. It's not difficult. Yeah, and then you have your SMAs and EMAs, which obviously I've gone over, which you also look on the internet or just ask us. Now, half of this stuff I know. Yes, okay, the academics teach you, but believe everything that I learned additional, I then searched, I then asked, I then looked into, because at the end of the day, you're trying to get yourself to a level whereby you know things so that you can tell people things. You can't empower people if you don't empower yourself. And this logic is needs to be applied to everyone. So that's basically a lot of the key points. I'm going to go over more, but I don't really have enough time to go over it now. When you're picking your EMAs, you're going to probably think, what ones do I pick? Generally, just go for something like 6, 18, 20 or 9, 18, 50. Find your own. There's also different strategies you can use with just EMAs to utilize trades. And yeah, man, I mean, I don't really want to go through anything else. I don't want it to be too much. I've probably gone over time anyway. I haven't looked at my phone, so I've probably got messages saying jump off. But that is, there's obviously knowledge, and I know traders that have been trading tens of years, and I've worked alongside them even before I started trading myself. And you know what? They always say they're always learning. So don't think, oh, there's so much knowledge. You're always a student. And if you ain't trying to be a student, then you've capped yourself already. Fact. So make sure you get through the academic videos. Make sure you ask questions. There's nothing wrong with asking questions. Just don't keep asking the same question. If you ain't understood it, don't be like, oh, okay. If you don't understand what someone said, just ask it, understand it, apply it, teach someone else. Keep it moving. And at the end of the day, when it comes to growing the side of the business as well, just to touch on that, some of you might just be interested in trading. Some of you might just be interested in network marketing. Some of you are doing both like me, obviously. But it is fact that you can make a lot more from trading than residuals. But, you know, when you start growing your team, especially with trading, it will come to a point when you could be earning crazy amounts on your trading and residuals. Some people earning like, you know, £1 million a month, literally with the bonuses. So, you know, if we're all about finances, which we seem we are, if we're on this call trying to do money trades, then you should be about your money in all aspects, especially if you're paying for it. It's a service you're paying for. So something to think about. On that note, I'll probably leave it there. I mean, I don't really know what else to add right now in a compressed time, but we'll do this again. But these are some of the key notes. So yeah, I hope that added value. And yeah, I'm going to pass it back to you, Ish. I don't know how to do this. Right. Andreas, it's coming to you. I'm making you host, my friend. Actually, you know what? I'm going to fling it back to Ish so he can fling it over to you. Yeah, so I hope all of you got some value from that. Obviously, any questions about anything particular I said, or you want some extra knowledge on it, just message me. I'm always doing calls with my team anyway. You can jump on them. I'm not like one of those guys, oh, you're on a different team. I don't mind. If it's helping you, great. There's people I've helped and they've made money and I didn't know they were even in my team. I won't say their names. If they talk to you, they'll tell you. But yeah, we'll just keep it moving. So obviously hope that was productive for you, and I'll pass it back to Ish. And yeah, I'll see you at the top. I'm going chairman with my team, by the way, along with trading. So if you lot are serious, I'll see you lot there. And yeah, let's keep it moving.
Ersul, thank you so much for that, bro. A lot of us have learned a lot of things in regards to what you're doing, so it's fantastic. If you just want to click off sharing your screen, I might be able to take that off for you. You've done it already. Fantastic. Okay, guys, let's give it all back to Mr. Gold. I think we all learned a lot of things regarding Williams Alligator, obviously SMAs, EMAs, and RSI. Very, very straightforward, you know, very, very straightforward to understand, you know, exactly how it all works when it comes to, you know, using the indicators. You know, these indicators are there to indicate you in the right direction. Now, without further ado, I don't want to take up too much time. We are going to move on to the next person. The next person I have is an individual that is doing absolutely amazing when it comes to the trading side of things. You know, Mr. Andreas Panayi. I'm about to make you host, buddy. Guys, please, can we show some love to Andreas? He's about to tell us a lot of things in regards to trading and exactly how we can elevate ourselves every single week. So guys, please show some love to Andreas. Andreas, you're now host.
Thank you very much. Wow, that was a fantastic training, Ersul. I have to say, listen, I've never heard Ersul do a call before, and it was so clear for everybody to take notes and understand exactly how to implement his style of trading. And I'm hoping to do the same here as well, guys. I'm looking rough as hell, but who cares, because we're at home every single day, and you can make money from the comfort of your home. So I'm just going to share my screen. For those that don't know about me, well, if you do, I'm sure you do. There's people being in there for quite a while, and people that haven't actually seen me before. But actually, let me make sure that I put this here, because I've got two screens, so I want to make sure I'm looking forward. All right, fantastic. I mean, my name is Andreas Panayi. Currently 28, 29 next month. Started this industry about a year and a half ago with Ish and Taz and many other individuals that are in our group chat. And I just came in here literally wanting to learn how to trade. Now, I used to trade retail concepts, so similar to what we've just been shown, and you know, it was very, very effective for me. But as Ersul said, everybody discovers a strategy that's, you know, for themselves. So for a good 7 months, I was trading retail. My favorite pair was Euro USD. I think it was about 5 to 6 months. I didn't lose a trade on Euro USD at all. And then I started to see some things were going on. I was like, hang on a minute, what's going on here? So I started to really dive into the charts, to the candles. I wanted to realize what was going on. And I soon realized that there was some institutional play, some banks playing around with the charts, you know, because they have the majority of the money to move the market. So as I said, a year and a half ago, I got started. I was working 2 jobs at the time. So whoever says they haven't got time to learn, whoever that says they haven't got time to make money, you'll be in the same predicament you've always been in. I'm not saying that's, you know, that's not, it's your choice at the end of the day. I mean, I was working in retail as a manager in Morrison's, wearing a green uniform, had a full-on ceiling that I was blocking. You know, my vision was never, you know, to be successful, because I was so conditioned to be, this is it. You know, biggest flop in school, didn't care, qualified as a plumber, didn't want to do it. I've chopped and changed every single job you can think of. I've worked from the age of 14. So guys, I know what work ethic is. And if you really want this to work for you, you have to be the reason why and make that happen. Now, I just wanted to start off by sharing my screen and just talk about, you know, a specific word that I like to look at. It's foresight. And the reason being is because, you know, all these confirmations on your charts and stuff like this, if you're not, you should never come into a market feeling anxious about you putting your trade on. Okay, you should never feel, oh, but what if it hits my stop loss? You should more or less see it as, I've set my stop loss, and if it hits my stop loss, I can take it with my account size. You know, it's, as I said, if you're going to be a scalper, as Ersul said, he's compounded his account to a certain extent where, you know, he can now be able to, you know, have a bit more leverage on his account. So he can do the 2 lot size in and out, catch the, you know, 10 to 20 pips, even more, but the 10, 20 pips will still get him his £300-400 very quickly, right? But if you don't have the capital and you're on a £100 account, you don't want to be, you know, over leveraging your account. So I'm glad he really went through that. He gave you a balance of making money the way he is, but realizing that you have to have a certain account to make the big money in those small moves. Okay, and the reason why I was talking about foresight is the ability to predict what will happen or needed in the future. Now, the reason being is if you're so confident and you know where you're going and you have your confirmations on your trade, winning or losing doesn't matter. You can see what's happening, right? And you believe that it's going to happen. And we're all about manifesting on what you want, right? You really want to manifest what you really and truly want. So I'm going to dive into the charts. I'm going to show you guys some stuff. Let me just close this up. I'm going to go over equal highs and support and resistance before moving on to institutional, because I want everybody to understand what I mean if you've never heard of me or heard of the style I do. So, for example, let's zoom into this. This is Euro USD. You can see that there is a high here and a high here, right? So it's equal highs. The reason being is it's got equal highs. So it's as simple as that. I'm not here to complicate anything. Now, from those equal highs, you can see that price rejected off. So this is how a retail trader would trade, is off zones, right? So you've got your resistance line or your ceiling that price has come up to and touched it and come down. But we're taught that we should wait for a break and retest. So for example, price to touch, come back down, touch it again before going down. Now, this move was good. I mean, guys, on a 4-hour time frame, we catch about 100 pips on the move down. Fantastic. If that's your target, that's your target. I mean, I was talking with Ishak today, and you know, just him getting 50 pips on a trade is a crazy amount of money. Each to their own. Everybody has their own way that they want to make money. 50 pips for him with the lot size that he uses can make him, you know, let's say, I'm not going to say exactly, but let's say between 3 and 6K just from 50 pips. Okay. Now, other people are here putting 0.03, which is 30p, which is what you should be putting on if you've got like a £150 account. Now, the reason why I'm saying is I want it to be important for you to know that risk management is key to leveling up your account. And I'm speaking through experience just by myself of the amount of money I've gained and the amount of money I've lost on my trading journal. And I don't want you guys to make the same mistake that I did, okay? So that is equal highs. Now, you soon realize that price comes down and breaks these equal highs. And some people say, oh, but there was another zone, right? They would have said, oh, there was another zone here, okay? Now, can you see what price wanted to do? It pushed through it again, okay? And it just keeps going up and up and up and up. So potentially, if you had, you know, a stop loss at these equal highs, okay? Let's say a stop loss was, I don't know, some people use about 30 pips stop loss if they're retail traders, okay? For myself personally, 5 to 8 pips stop loss maximum, 12 pips to 15 if I'm US 30, okay? So let's say they went in on this trade here, they made their 100 pips, their target would have been based on maybe equal lows. Where can I find equal lows? You can look back in the market. These are equal lows, for example, equal lows on the higher time frame. Okay, price comes back down to it and bounces off. Okay. Now, the reason why I'm telling you is that institutionally, which is banks, will look at these as areas that they want to take out. Okay, they want to wipe you out the market. So, for example, if you had a TP down here and you wanted price from this area to drop down to that same zone or area that you had, and price went down here and you're like, you know what, I'm going to go break even, and then you break even, or price decides to completely wipe you out and you lose 30 pips when you're 100 pips in profit. I want you to understand that there's a way in the market that equal highs are targeted areas for institutional banks to take you out the market, okay? So let's say, for example, we have two schematics, okay? So we've got, some of you already know this, so I'm not going to go too deep into it, but we have Wyckoff logic, okay? So what we have is an accumulation, which is a buy and move up. Now, can you see this up and down movement in between these two lines? It looks like consolidation because it's just sideways movement. But imagine it on the higher time frames. There might be a nice 100 pip move in here, but what me and a few of the other individuals in the team call this noise, okay? And what I mean by noise is that this is not the big move, okay? So for example, as you can see, market will break out of it. So that's the banks selling to then buy for the big move. So they would stop you out. You would probably buy here, it would stop you out and then move up, okay? And then what we have is a distribution, which is a sell move, which is, it will do the same thing, break the ceiling, and then do the huge move down, okay? So that's Wyckoff logic. If you want to type up Wyckoff logic on Google, you can, and I can recommend the educators that cover this topic, okay? Now, let's start with, let's start with a distribution schematic. So distribution, as we said, is a sell look, right? So if you look at this religiously, like me, I've got, you know, it printed out, I've got it as my background on my phone, you know, if you look at this picture, you will soon see it everywhere, okay? And I don't want you to get too obsessed with it, but I want you to realize that when you see this, you can understand what's happening in the market. Now, this distribution schematic has given not only me, but thousands of people that have realized that institutional concepts have caught them those sniper entries, right? Excuse me. So, for example, it would buy up, and this is that area that I was saying to you, you know, the support resistance area, and then it will bounce out and do a huge sell. Now, wouldn't you want to be the person that catches that huge sell from that area, okay? Now, you can even have a very, very small stop loss because of this also. Now, I'm going to get Euro USD up, okay? Now, we're looking at Euro USD on a 4-hour time frame, right? So we can see equal highs were taken out and came down on a huge sell. Now, where am I going to look? I'm going to look in this area here. Let's find out why price, right? Why price went down 370 pips in one move, okay, in a very comfortable manner, okay. So what I'm going to do is I would say that let's go down to 30 minutes. So within that highlighted area, okay, I know you're thinking, okay, hang on a minute, I really don't get what you mean, but I'm going to show you right now. So in that highlighted area, if you really dive into the candle on the 30-minute time frame, okay, so let's just highlight this whole picture here right now, okay. So we've got a picture up. Now, if you were paying attention, you would have got up the distribution schematic, because I was talking about this distribution schematic, and I told you could get it from Google. Some of you didn't, right? But some of you actually took a picture of your, using your mind of what the pattern looked like, and you kind of realized, yeah, it was a sell move, okay? So let's get the picture up, and let's put it side by side with my highlighted area. Can everybody see the picture now? Can everybody put a 111 if you can see in the picture right now, picture by picture next to each other? If you don't, please tell me and I will show you again. But can you see this move? Can you see this move? Can you see this line? Can you see this line? Can you see the big move up before the move down? Fantastic. Okay, now imagine programming your eyes to see this everywhere. You're going to see this on every chart. Like, oh my God, it's distributed. What does that mean? I'm going for a sell. Fantastic. Now, what we're going to do is we're going to put these little abbreviations on the chart, all right, just to make it clearer. Okay, so for example, I'm going to get a horizontal ray because I like using horizontal rays. It should be yellow. If it's changed, I'm going to change it again, but it should be yellow. Okay, not yellow. Give it an orange. All right, we'll leave it as that. Okay, so for example, this is called a buyer's climax. So we're looking at where price. So let's make out this area was not here. Okay, so we're looking at just this. Okay, that would be our BC. Okay, that would be our BC. Let me get the picture up again. So BC. After BC, we had what was called an automatic reaction, which means a sell down immediately after hitting that area. Okay, so if you want to dive in, okay, my black candles are sell and my blue candles are buy. I will explain that on another session, and you'll understand it if you went on the same session as me. You know what? Because all my boxes are different, let's change this to green, just to make it pop a bit. Guys, always make your charts clear so you can understand fully what you're looking at. Okay, so we established, let's put caps lock, BC, buyer's climax. Okay, we also had automatic reaction, not all 30 minutes. No, I do this on every single time frame, buddy. I can even show you a distribution schematic on a 1 minute time frame. I'm just saying for this pair directly, I could see the distribution within the 4-hour time frame as a 30-minute distribution. Okay, so if you were to look in here now, your PSY would have been this area here. I'm going to write, or I'm just going to put P here, guys, because of time. Okay, I'm just going to put a P here. And as you can see, this movement down is what's called a sign of weakness. Okay, sign of weakness. Okay, so sign of weakness, SOW. Okay, guys, just get used to doing this. If you're trying to learn this, do it on your demo account first. I don't want you doing some ridiculous stuff on your account. Oh, I saw a distribution schematic, but you didn't really know what you were doing. Please don't do that. Okay, practice this and make your money utilizing the live sessions and the services. Okay, now as you can see, after the SOW, there's what's called a up thrust. Okay, the up thrust has to be above this area. Okay, now with the up thrust, it can generally, usually, let me get a pen out so you can see. Generally, it does this usually. Okay, comes lower and then creates the high move. Okay, but it's not going to be identical to the schematic. So please don't think it's going to be picture perfect. It's not. You can see it popped out and reduced low and then went back up for the buy move. So that is our UT. Okay, it popped above the BC line. If you want to make this clearer, go to line chart and tell me you don't see it clearer, because I know for a fact you see what I see now, okay? So there is many different schematics, so don't think that it's just distribution schematic 1. There's, you know, like 40, I believe, accumulation schematic, which is the buy move. But let's stick to the basic ones for now. So let's go back to candles, okay? Let's say this is our up thrust, so UT. And what happens after UT, okay, is up thrust after distribution. Okay, this is the area we want to get to. Now, this high point here is the UTAD. Now, that's its peak. Now, most of us are unaware, but within all of this sell move that happened prior, so if you have to look left to look right, okay, you have to look left to find out what's happening in the future. You have to look in the past to find out what's going to happen in the present. So this is a very, very key level where institutional play is happening. This whole area here looks kind of manipulated. It's too deep of a sell. 30 minutes, 30 minutes, 30 minutes, 30 minutes. A full-on time frame that it was just selling, right? No, anybody that jumped in would have been making money on the sells, okay? So when you see that, you realize that's an institutional play, okay? And within this time frame, there is information in here in the lower time frames. Okay, I'm not going to dive too deep in it because we're not trying to be social media traders right now. You know what? I'm not even going to go there because I'm going to lose some people if I do. We can advance on that next week. And if you don't invite anybody on the call next week that's in your team, that's your own fault, because each week we're going to progress as a team. Okay. Now let's go back to 30 minutes. What I was wanting to say to you is within here, there was an indication that price would sell off. So let's remove this other square. So within here, there was a candle, which was a buy to sell candle or sell to buy candle within this time frame that you would have caught that social media entry. Okay, I call it social media entry. I think it was Taz that kept saying it to me. He's like, why do you have to be like one of those Instagram guys that get that boom, wick entry, you know, never came back? Fantastic. If you do it, fantastic. There is more risk to it, but you can have very, very, very small stop losses. I mean, 4 pips sometimes. You can have 5 pips, 10 pips. Like, it's really not a lot, okay? And if it stops you out, it stops you out. Accept it. If you're going in on a trade with a stop loss, it's not going to be one of those, if it hits my stop loss, I've run out of money. No, don't do that, okay? So if you miss the UTAD, calm down. Okay, calm down. My problem was as a trader is I've missed an opportunity and I want to get back in the market as soon as, because I missed the opportunity. Now price decides to, you know, go down and you're like, God damn, I missed out on 42 pips, right? Big deal. Don't cry about it. Okay, I missed 42 pips. What price will do is come back. Okay, now where does it come back to? Can you see on the schematic it says test? Now, for those that want to understand this concept and really want to learn Wyckoff or, you know, distribution schematics or accumulation schematics, wait for the tests. I promise you, you will bag money on waiting for the test. Patience will be the reason why you make huge amounts of money. And this was one of the best sells on Euro USD in the recent months, okay? Now, how do we indicate where the test would be? Can you see this buy to sell candle? Full on buy to sell candle. Can everyone see that? Put a 111 in the group chat if you can see it. I love if people are interactive in the group chat, so it means they're listening and they want to learn more. And that means I like showing more. That means I'll show more money. But let's just keep to the basics for now. Buy to sell. How do we work out where to enter? So what you would do is you get your Fibonacci, okay, and you can go from wick to wick, okay, or you can go from body to body. It's entirely up to you. If you want to get it really, really clear, you have to zoom in. Now, this isn't picture perfect, as I said to you. Sometimes it is, sometimes it isn't. But this isn't picture perfect. I can fully admit that, okay? But if you can see, there's a 50% marker, okay? Now, what price did, it actually went to 88%, okay, which is premium price, okay? But initially you want to watch for price to close below the 50%. I know on this picture it didn't exactly do that. It went off the 61.8 area, which is still a good area if you're looking into retail style of trading. But 50% of the buy to sell candle. Okay, now you doing that and waiting for that test, okay, you would have shorted this trade from the test area. So let's say you put a sell on from that marker. Okay, your stop loss would not be anything above this high. Okay, so let's see what the stop loss is on this time frame. 12.5 to 12.6 stop loss. Okay, now guys, what I'm going to say to you, please don't jump the gun and think, yeah, I'm fantastic, I'm going to go for it. But I'm going to use that as an example. Let's say you had a one lot size, okay, £10 a pip, okay, you're risking 12 pips, okay, you're risking £120 to lose, to gain, okay. Now if you're using a pound, you know, you're losing £12.60, okay, so you need to really work out for your accounts what's right for you. So I highly recommend, if you've got 150 to 200 pound in your account, stick to 0.03 please, which is 30p, and I'm going to show you that 30p still can make you a lot of money with this style of trading. But if you're going to master it and you compound your account to, you know, tens of thousands, you're going to make a lot of money. You're going to be a, you know, 8 to 9 figure trader for sure. Okay, now our target would have been based on a 4-hour time frame. Okay, so I want you to look at this now. Give me one moment. So I would potentially be looking at an area that it's come to before. Okay, so for me personally, there's a lot of rejection of this area. Okay, there's a lot of rejection of this area. So we're going to look to take this trade down here. Now, with that being said, I don't mean we're going to ride it all the way. This means if you want to get re-entries, you can get re-entries, but you should be content with taking it out here anyway. It's up to you if you want to leave a little bit riding, okay? So I've shown you a 12.6 stop loss, okay? And we're potentially going to ride it down on the 4-hour time frame, okay? So around 350 pips in one move, okay? In one move. Now let's go back to the 30 minutes as all about transitioning from times and looking for patterns that have happened in the market on a regular basis. Now, generally, price on the schematics likes to come below the sign of weakness and create a new sign of weakness and a move down even more. Okay? And move more down. Guys, look at this. Can you see the picture? I'm sorry, let me really get... Guys, I want you to take a mental shot and take a picture if you really, really want to, guys, because it is my favorite pair. I'm going to sit here and say to you, but can you see the picture that I see? Can you see exactly the same thing that is on the schematic to what's on the screen on TradingView? Okay, and don't worry about my mum hoovering and the noise you can hear. She's not really hoovering, but you know, I like to say that. I think it's hilarious. But can you see this stare-like moment that happened? This stare-like moment. What that means, guys, is multiple entries with small lot size. Have that in mind, because we've got people like, you know, Tanvir, that some of you have been on these calls. It's because he catches on the 1 minute time frames 1% risk moves again and again, because he knows where market is going, guys. So you're going to catch multiple moves. Whoever drew on it, if you want some art lessons at the end, I'm free to help you, because I do love to paint and sketch. So if you want any lessons after, I'll help you out on your sketching. So as you can see, you could have caught multiple entries on this trade alone, which means your 300 pips becomes thousands of pips. Anyway, let's not get deep into it. Let's remove off the last 2 entries. So guys, with that being said, that would be a distribution schematic with 12 to 13 pip stop loss and a gain of 310 say 350 pips. Fantastic. One trade. Now that's within a big picture, guys. Okay. So let's go back to the 4 hours. Again, guys, I'm a bit time conscious. I'm sorry, but I'm going to speed through this. Okay. Now, let's remove what you saw with all of this sell. So we called the nice sell. Now you must be wondering, what does the buy move mean then? How do we get in on a buy? Like, is it the same thing? Yes, it is. It's just the opposite way, and it depends on what time frame you're looking at. Because guys, I can catch a schematic on a 1 minute. I can catch it on a 15 seconds, 30 seconds, whatever you want to do. We've got multiple people on the call that utilize this strategy every single day. I want you to look at this picture now. Okay, so actually, there's too many lines, guys. I like charts that are clean because it's easier for me to show, as well as it's easier for me to understand myself. Don't confuse yourselves, okay? So let's look at this now. Let's look at this picture here. Now, bear in mind, this is on a 4-hour time frame, so each candle does represent 4 hours, okay? I'm not going to do what I did last time because I ended up having a picture of somebody popping up, so I'm going to make sure I click on the right picture. We've got an accumulation schematic, which means a buy move. Buy move. That's what it means, accumulate. You're buying something, okay? Now, we've got a similar thing, but we've got seller's climax now. We had a buyer's climax prior. Now we've got a seller's climax. What was AR? Guys, for whoever's in the group chat that was listening, that doesn't really know this, what does AR stand for? Thank you very much. Well done. Automatic reaction. Fantastic. Okay. Automatic reaction. Okay. Secondary test. And again, this is the area that's full of exactly. Everybody's got their own terminology. Look, if you listen to Naked Forex, we're not rejecting off the market. We're kissing the market. However sexual you don't want to be with your charts, go for it. Okay. I will stick to the way I was taught, and everybody else will stick to what they hear on the calls, because every educator has a different way of teaching people. Like for me, I feel that I've simplified it, but then when I hear the educators, I'm like, they really do simplify it. And I'm not trying to be an educator, so it's really good to learn every different way of putting it and make it your own. Make it your own, okay? So if you've got these two areas, which is support and resistance, okay, we're going to now do this, get this up, and get the accumulation schematic up. Okay, I'm gonna have to zoom out because this is a bigger time frame. Let's squash it down like this. Okay, guys, if you didn't get in this trade, you missed the biggest buy on your USD for a little while. Okay, so can you guys see the picture on here? Now, it may be a little bit confusing for you because it's not picture perfect. Okay, can you see the accumulation schematic now? So let's move this across. So the sell move down, okay, and the move up, and then what we call the spring and the buy up. Can everybody see that? Put 111 in the chat if you can see that. Fantastic. Okay, so on the 4-hour time frame, tell you what, we'll cheeky something. If you don't know how to do this, press right click and you go visual order, center back, and then the chart will go above the box. Okay, so what you need to realize now is that we have what's called a seller's climax here. Okay, seller's climax. What happens after seller's climax, guys? We have an automatic reaction. Okay, and if you want to make it picture perfect, start putting your lines. Okay, start putting your lines. I'm gonna move this, make sure that I make it nice and green for you. Okay, now as you can see, there is an area that goes above the accumulation schematic. Okay, it goes above the automatic reaction. Okay, now where this one is different, so what I want you to realize is there's over 40 different accumulation schematics. I'm only showing you type 1, okay, but there's some that have multiple springs, multiple secondary tests. So just bear in mind it's not going to be picture perfect, okay? So this is actually the spring move. So do you remember I said to you on the distribution schematic we had a UTAD? This is the spring. It's basically the UTAD the opposite way. Spring, What happens with a spring? A nice buy, right? Now, would you agree with that? This is a social media entry again, right? This is a social media entry. You would have called 263 pips. You missed it, you missed it. Can I say to you? Sorry, you missed it. No, you can get in again, don't worry. Even if it goes 300 pips, don't worry. If it comes back and does the test, which it will do, you're going to get the bigger move. If you think this here was the big move, you're mistaken, my friend. Because we're going on a 4-hour time frame, so expect 500 to 1,000 pips easily on a 4-hour time frame. Easily, one trade. You're done for the week. Okay? Now, how do you get this spring? Now, remember I said to you, I wanted to show you how to find out what happens is within here, there's something that happened for it to reject exactly off, okay? Now, what you want to do is go on the lower time frame again, if it lets us. I don't know if it will because of the yeah, cool. Remember I said to you, when you see a funky buy or a funky sell, something's not right. Can you see this? Something's not right within here. Something happened in here. And if you break down in the lower time frames, there is a candle within this. I can't remember what time frame it was. I believe it's 15 or 5. I'm not sure. If it lets me go that far back, it'd be fantastic. Let's scroll back. Let's have a look. You see, sometimes it doesn't let you go back. So it doesn't let you go back. So we're going to go back on the 4-hour. And you're going to establish where this big buy move happened. Here we go. This institutional candle. If you do 50% of the buy to sell, okay, you should more or less find within the lower time frame. It was definitely on the lower time frame, but you would have caught the sniper entry because it closed above the sell to buy candle. Does that make sense? I hope that makes sense, guys. Does everybody understand that? If not, I'll go over it. So a sell to buy or buy to sell candle. Okay, fantastic. So for example, what you need to realize is that the candle ended up closing above the 50%. Remember, if it closes above the 50%, it's confirmation that price is reversing, okay? Now this spring happened, but we didn't get a test. There was no room for me to get a back in the market, so price went, okay? But if you look on the, sorry, give me one moment. If you look on the accumulation schematic, can you see the test is more or less near the seller's climax area? Okay, can you see that? Okay, so there's a test area near the seller's climax area. So if you go back to it, seller's climax line, okay, it broke it on the spring, but price came back. It came back, right? And when it came back, we were going on that for our entry, okay? So let's say we had 50% of this, so the sell to buy candle in the lower time frames. I'm not going to dive into it because of time. There's a lower time frame, there's a sell to buy candle. We mark 50% with the fib. It brought up, okay? Tests it, okay? And once it does its move, it hasn't gone past what we're looking for. It then done the biggest move on Euro USD. So let's say, for example, we entered a buy move. Sorry, guys. Okay, entered a buy move, and we had a stop loss like so. Okay, you would have made. Let's calculate this properly. Let's zoom out. Let's zoom out. Let's zoom out, guys. Can you see equal highs? Remember I mentioned earlier, and there was a reason why I said equal highs. Can you see this? Can you see where price decides to, let's move this orange. Let's take this orange away because I think it's throwing people off. Can you see these equal highs? Can you see how it rejected and it done a retest And you know, retail are like, that's confirmation for the sell, guys. I'm going for the sell from here because there was a test. No. What price does during a schematic or institutional move is it breaks the equal highs and says, you know what, I don't care if you're there. I'm going to keep going. Then there's equal highs here on the lower time frames. It keep going. And you would have caught a disgusting buy. And I call it disgusting buy because if you go on the daily time frame, it's still yet to come down because there's equal highs here. So potentially this could keep going up on a bullish run, or it could reverse. Depends on the schematic it's doing. But guys, from this trade alone, just taken from roughly, I'm not going to get it exactly accurate, but from here to here, one trade, 880 pips. Guys, you do not need to trade big. You have good risk management depending on your style of trading. If you want to use scalping, please know that you can handle it on your accounts. And if you want to practice this, practice it on a demo. But as I said, if you had a 0.03, let's say 30p, maths is rubbish. So £264 30p. Okay, if you had a pound down, it's £880 from one trade. Fantastic move up. You could have caught multiple entries, re-entries, knowing that price is going where it's going. I think that's about it in terms of, let me just read this. Okay, cool. So, I mean, with that being said, that's all I wanted to cover. What I wanted to say to you is that there is a picture within the picture, within the charts. And if you want, on Google, you can type up Wyckoff, you can type up schematic, accumulation schematic, distribution schematic, and you can get all of this information you need. Highly recommend Bounce Back Sniper. Is trade signals that are sent directly by educators that have been doing this and mastered their craft for over 13 years. Multiple 8-figure earners, and they're live on 2 p.m. Tuesday, Wednesday, and Thursday with bounce back sessions. The likes of Rock Kuma comes on at 11 a.m. Zachary Jordan and a few other educators come on at 2 p.m. and there's another call at 8 p.m. So there's multiple individuals that can do these live sessions, and don't be afraid to go on them and ask them questions, right? Guys, they're on a payroll. Okay? They're on a payroll to educate everybody. Why are you not utilizing them? I don't understand. If I'm having a bad day, for example, the last 2 weeks, I've literally been making furniture. I've got bruises, cuts, my hands are battered from manual labor, helping my sister move in a place, helping my other sister move out. And I was able to still jump on a live call on my phone and they're saying buy USD or sell US30 because I didn't have the time to get on the chart. So if you don't have time, right, and you don't have money, how long do you want to have that problem, right? Because what you do now in this space of time and in this time to learn all this stuff is going to benefit you in the long run, and you're going to have both money and time combined. So on that note, guys, I want to leave it there. I've lost my voice because I always get excited. So if it's on a long time frame, if it's on a longer time frame, you know that it's going to do a longer move, so you can have re-entries on the lower time frames. If you want, you can find an accumulation or distribution schematic on a 1 minute on US30. Have a look at it and you will see it happens very regularly. It's very clear on US30 and other pairs, and you can label distribution or accumulation schematic, but it's not just the only thing you should be looking for. I'm just saying, if you can see it, then you know what it is. If you can't see it, don't force drawing it. You can get entries just by imbalances in the market, whether it's buy to sells or sell to buys in the market. Ish, I think that's me done. But yeah, I really appreciate your time. I really appreciate you guys jumping the call. I know we ran over, but it's all for you guys to set you up for a very successful week. Ersul smashed it with, you know, fantastic training on scalping. So guys, if you've leveled up your accounts, you can start doing this. But as he said, you don't need to do it on gold. You can do it on other things, but gold is his favorite pair. So find your favorite pair, find your favorite educator, find your favorite staff. Simple as, okay? Ish, do you want me to end it, or you want to finish off by saying something? Where is he? I think that's it, you know. Guys, any questions before I round it off? No? All right, fantastic, guys. I really do appreciate you coming on the call. Let's have a productive we've still got time in the weekend, guys, to do as much back testing, trialing out both of our strategies out on the charts. And yeah, have a productive week, and I look forward to hearing all the money you lot made this week. And yeah, good vibes. See you a lot later.